Greetings. This information was compiled for the IRS Reddit community and those interested in some ways politicians avoid taxes. The records show that wealthy Democrat and Republican elected representatives and appointed leadership have slashed their taxes using strategies unavailable to most constituents. It's not hard to imagine how this happens, considering that most have early access to valuable information on key legislation and funding, open access to enormous government repositories of research and development, and patents, lacks oversight on personal investments while performing as conduits and influence peddling for lobbyist interests. Using the Personal Gain Index of the United States Congress, the average increase in net worth in the top 100 was 114% per year. Of the top 100, 56 are Republicans, 43 are Democrats, and 1 is an independent. The U.S. tax system benefits wealthy people who can afford not to take income and keep their value in stocks, assets, and other investments. Beyond typical wealth hoarding tactics, politicians have been found guilty of numerous finance crimes, campaign finance violations, dark money, and connections to organized crime. Political action committees, dark money groups, and generic political LLCs. LLCs give their owners the limited liability protection of corporations and the tax advantages of partnerships, and election lawyers say they are increasingly popular with political donors and organizers. Intended principally for small companies with 2 or more owners, LLCs allow political organizers to operate almost wholly outside disclosure and campaign finance rules. And unlike politically active tax-exempt groups, which must publicly report their officers and grant recipients to the Internal Revenue Service, LLCs leave virtually no paper trail. They can simultaneously easily avoid Federal Election Commission disclosures, public IRS filings, and corporate taxes. Investigation after the 2012 elections disclosed a complex network of well-funded social welfare groups and limited liability companies with links to the conservative billionaires Charles and David Koch. Over a half-dozen 501c4 social welfare groups, including Americans for Prosperity, which spent $122 million in the 2012 cycle, received hundreds of millions in contributions routed through limited liability companies with opaque names. Many of these groups are being formed intentionally in a very low-key way: dark money. Here is how dark money makes its way into elections. Politically active nonprofits are generally under no legal obligation to disclose their donors, even if they spend to influence elections. They are considered dark money groups when they choose not to reveal their funding sources. Opaque nonprofits and shell companies may give unlimited amounts of money to super PACs. While super PACs are legally required to disclose their donors, some of these groups are effectively dark money outlets when the bulk of their funding cannot be traced back to the original donor. Politicians also use irrevocable trusts to minimize estate taxes, access government benefits, and protect assets. One example is a grantor-retained annuity trust, GRAT, a financial instrument used in estate planning to minimize tax on large financial gifts to family members. Assets are placed under the trust, and an annuity is paid to the grantor every year. When the trust expires, the beneficiary receives the assets and pays little or no gift taxes. Another deceptive method is CRATs, charitable remainder annuity trusts. Wealthy were siphoning assets that otherwise would have been subject to the estate tax and pouring them into tax-exempt foundations benefiting their politics. Philanthropic donations show that while many politicians give for various social reasons, many of these donations serve to promote them originate from CRATs and often blur the lines between personal charitable action and campaigning.